Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world, and sometimes it makes no sense at all. Get ready for a licensing deal that sounds like a blockbuster movie plot, but it's actually just another Tuesday for Alpha Modus Holdings. Today, folks, we are diving into an 8K filing from Alpha Modus Holdings. Now, an 8K is like a company's immediate announcement of really big news, the stuff you absolutely need to know right away. And Alpha Modus has definitely delivered on the need to know front. Alpha Modus deals in Class A common stock. Think of common stock as a basic ownership slice of the company. If the company does well, your slice might become more valuable. If it does poorly, well, you get the picture. The par value here is like a super tiny, almost worthless legal face value, kind of like the penny you might find in your pocket. It's there for legal technicalities more than anything else. They also have these things called redeemable warrants. Imagine these as coupons that give you the right to buy the company's stock at a set price. In this case, $11.50, before a certain date. They're often given out as part of other deals to entice investors. The fact they are redeemable just means the company can buy them back under certain conditions. And these are traded on NASDAQ, a big stock exchange, which tells us they are a publicly traded company trying to get noticed. Now, Alpha Modus is checking this box here that says they are an emerging growth company. This is a special status for newer, smaller public companies. It basically means they get a bit of a break on some of the reporting rules, allowing them to ease into the public company life. It's a bit like getting the learner's permit before the full driver's license. Alright, let's cut to the chase. The main event here is an intellectual property license agreement signed on July 21st of last year with a company called CashX AI and CashX. Intellectual property, that's basically the company's ideas and inventions like their software or how their apps work. So Alpha Modus is licensing this technology from CashX. And this isn't just any license, it's exclusive, meaning only Alpha Modus can use it in the US. It's perpetual, which sounds like forever, and irrevocable, meaning it can't be easily taken back. They're getting rights to use CashX's mobile app, their kiosk app, which you might see in stores, their back office system, and even a prepaid card. This sounds like Alpha Modus is getting ready to launch some new services or products using CashX's tech. So what's the price for all this? An initial payment of $1,000, which is basically nothing in the grand scheme of things. But then the real kicker, Alpha Modus is going to issue $10 million worth of its own stock to CashX. The value of that stock will be based on what Alpha Modus's stock price is on the day they issue it. This is a common way for companies to make big acquisitions or deals without shelling out tons of cash up front, but it does dilute the ownership for existing shareholders. But there's a catch. That $10 million in stock won't go to CashX right away, it's conditional. Alpha Modus has to hit certain financial milestones using this licensed technology. Specifically, they need to either make $1 million in profit before certain costs, or $5 million in total sales from these licensed products. Think of it as a performance bonus for CashX. If Alpha Modus doesn't hit these targets, CashX doesn't get the full stock payout. This is a smart move for Alpha Modus as they are tying a significant part of the payment to actual performance. And here's another big hurdle, shareholder approval. Before they can issue more than 19.99% of their stock to CashX, they need the green light from their own shareholders. This makes total sense. Issuing a big chunk of stock needs the blessing of the people who already own the company. The deal also comes with obligations for Alpha Modus. They have to try their very best to get enough money to run the company until it can pay for itself, meaning until it's cash flow positive. On top of that, they have to invest between $500,000 and $2 million over the next 2 years to actually use this licensed technology. This shows that Alpha Modus is expected to put its money where its mouth is and actively develop these new products. And the initial investment isn't just the $1, they're making a $250,000 investment structured in tranches. The first $50,000 app is commercially released. Another $100,000 will be paid when a specific kiosk called Deltrix is certified and working, and another $100,000 when a G-Mega kiosk is certified and working. These are concrete steps, milestones that need to be met for payments to be made. It's all about getting these different components of the technology up and running. The rest of their investment commitment, up to that $2 million maximum, is basically considered satisfied if they can successfully launch an offering of their own stock that raises at least $2 million. It's a bit complex, but it ties their investment in this deal to their ability to raise capital from the public market. Moving on, let's look at the unregistered sales of equity securities. This means they've sold stock without going through the full formal registration process with the government. This is usually allowed for private placements to specific groups of investors, like those considered accredited, meaning they have a certain level of income or net worth or are financially sophisticated. So on July 16th, they issued stock to their board members who aren't full-time employees. 4 of them got over 21,000 shares each. This was part of their quarterly compensation, valued at about 1.18 per share. That's a pretty low price, indicating the stock might not have been trading per share. That's a pretty low price, indicating the stock might not have been trading very high at that time. They also gave 1,000 shares to a sales consultant for their work. It's typical for companies to use stock as payment for services when cash might be tight or to incentivize performance. Their chief revenue officer also got a payout in stock over 52,000 shares, again as part of his quarterly compensation. This is usually a good sign, showing that key leadership is being rewarded with ownership in the company. And in a move that screams, we need to manage our debt, they issued a significant chunk of stock, 138,000 shares, to a lender. This was to partially pay off a $500,000 loan. When a company repays debt with stock instead of cash, it can sometimes signal that cash is a bit tight or they're trying to conserve it for other operations. All these stock issuances were done under an exemption that allows for private sales of securities, essentially meaning they weren't offered to the general public. The reason given is that the investors were accredited or financially sophisticated and had access to information about the company. This is a standard legal justification for these types of private transactions. After all these issuances, Alpha Modus ended up with over 41 million shares of Class A common stock outstanding. This number is important because when more shares are issued, the ownership stake of existing shareholders gets a little smaller, a process called dilution. This section mainly points back to that stock issuance we just discussed, reinforcing that these changes in stock ownership are related to director and officer compensation and other arrangements. It's more of a cross-reference than new information. And finally, the exhibits. This is where they list all the supporting documents for the report. The most important exhibit here is Exhibit 10 on, which is the full text of that intellectual property license agreement we talked about. That's the real meat of the deal, detailing all the terms and conditions we've touched upon. It's essentially the contract that governs this entire technology partnership. And the report is signed off by William Alessi, the president and CEO. This is the official stamp of approval from the top of the company. So what's the story here? Alpha Modus Holdings is making a big strategic move by licensing significant intellectual property from CashX. This potentially positions them to launch new products or services that could be very lucrative. They're paying for this with a combination of a small cash payment, a massive chunk of stock, and performance-based milestones. This deal shows a clear intention to grow and expand their offerings. But it also comes with significant commitments. They have to invest heavily in using the technology, and they need to hit revenue targets for the full value of the stock deal to be realized. Plus, they need shareholder approval for some of the stock issuance, which can be a hurdle. The stock issuances to directors and officers and a lender suggest a company actively managing its capital structure, potentially stretching cash while rewarding key personnel and managing debt. The biggest risk here is execution. Can Alpha Modus actually capitalize on this technology? Can they secure the necessary capital and drive sales to meet those performance thresholds? If they can't, the value of this deal for CashX might be limited. And Alpha Modus could be stuck with costs and an underperforming asset. On the flip side, if they nail it, this could be a game changer for the company. It's a high stakes move that we'll be watching closely. Alright, that's our breakdown of Alpha Modus Holdings' latest filing. What's your take on this licensing deal and what it signals for the company's future? Do you think they'll hit those targets? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out our Discord community linked in the description for more real-time discussions and insights. Thanks for watching, and we'll see you in the next one.